Hello friends, this is your host JP Mandal from JP Mandal Show. Today already second month February and we are going to talk about JP Mandal Show is all about finance and real estate, and we have an awesome guest, my awesome managing broker, Gill Financial President, Mr. Manjit Gill. Welcome to the show, sir. How are you doing and how is New Year resolution going on?
Okay, Jay, thank you for your kind words. So, my name is Manjit Gill with Gill Financial and Insurance Services here in Union City, and I'm very excited. Just going back and forth. Answering your questions. I know you know all the answers, but this is something you ask me, and I'll give you my perspective. So let's start with the first question.
So the first question is, a lot of people make this resolution New Year. I want to buy the house. I want to get like fit. I want to make my financial planning, but they usually fail. So my question is regarding the home buying.
Mhm.
How should people plan it and get success, especially this year, 2024?
Yeah, it's buying a house. I know it's a big decision. It's a dream. It's called the American dream. But the idea is, why you want to buy the house. That's the number one question. So if you are married, then you need to, talk to your spouse. Hey, you want to buy the house, you want to start a family, or maybe you already have a family, or if you are kind of retired, you want to size it down, right? So your kids have gone to college or school, and now you want to downsize the living space, then the decision is different. So what I would say in that situation, whenever you want to buy a house, you need a professional, talking to you just like Jay over here, who can guide you through the whole process. But even before you go through that, you need to know the right reasons to buy the house. First, uh, the payment commitment, right? So buying a house is a long-term commitment, 30-year loan, and if you are planning to live over there 7 to 10 years, then that's a good decision. If you are planning to live over there for only 2 3 years, it may not be such a good decision, right? You may not recover your initial cost of doing the loan or purchasing the home or the closing costs. So if you are planning to live there for 7 to 10 years, you like the area, you like the location, you like the house, then go for it.
So many people are waiting for this interest rate going down. So do you think like 2024 is interest rate coming down, or they should wait, or they should right now they should, if they get opportunity to get approved, they can offer, they should get the house.
For this one, I would say if you are planning to live there for 10 years, right? So that is a number one decision. If you're planning to live there 7 to 10 years, then I would say don't be concerned about the interest rates too much at this time, because nobody knows where the interest rates are going. Hopefully, they are going down. If not in 2024, then in 2025, right? So it may go down a little bit. But if you find the right house for yourself, where you're going to live 10 plus years, then you will have an opportunity year down the road, whenever the interest rates goes down, to refinance your home, right? Most of the time you can do it with zero cost. These days, there are promotions going on, and you can talk to Jay about that, and then you can buy the house that way. So nobody knows where the interest rates are going. Hopefully they are going down in the near future, hopefully this year or the next year. But if you're planning to live there from 7 to 10 years, go get it.
All right, awesome. So the next question I have is, here recently in California and other many other states, the insurance company are leaving California, and people are having hard time getting the insurance. So since you are insurance broker and you have been in the industry a long time, what is the reason behind this is happening?
Yeah, so the one thing, insurance is a major thing. If you're buying a house, you're gonna need insurance on that. If let's say it's like $1 million investment, there's a loan of $1 million, you put in so much down payment, and all of a sudden, if the house gets burned down, if you don't have insurance, you will be out $1 million, right? The bank will still need to get paid on their loan if you're even if your house is not there. So insurance is a necessity, and it is required by every bank. And the cost of insurance could, make or break your decision to buy the house. You may need flood insurance at that place.
Right.
You may need, of course, the home insurance, dwelling fire insurance over there. So the reason a lot of insurance companies are leaving California is because of number one, because of a lot of claims, wildfire risk, and the cost of construction has gone up. And cost of construction, cost of materials like lumber, the roof, tile, the labor cost has gone up. All these costs have gone up, but the state of California hasn't allowed a lot of insurance company to increase the rates, insurance rates that much as they need to stay in the business. So now all those insurance companies, since the insurance department is not allowing them to increase the rate, but right now they are listening to it. So what the insurance companies did, the major one like State Farm, Allstate, Farmers, those people said, hey, we're not going to write any new policies in California. We're going to create a situation with the clients, the voters. They're going to put pressure on the Department of Insurance or the insurance commissioner, and then they have to listen to us and increase the rates. And once they increase the rate, hopefully all those insurance companies will come back. But in the meantime, if you have insurance right now, don't forget to make the payment on time, because if it cancels, your insurance company may not take you back, and the new one could be really, really expensive. At the same time, insurance, where was I?
So insurance, right? Because they need to pay in time.
Okay. Yeah, they need to pay in time, because you may not get the insurance at the same price. And when you're buying a house, please do check the insurance rates. Just as you're going to check the property taxes, your mortgage payment, the interest rate, and everything, do check the insurance rate. If you're going to need flood insurance there, talk to your realtor, they can check it for you. So that could come into play, how much house you can afford. Yeah.
Right. So the insurance that the home insurance, like checking, doing the homework has been crucial, because some of this company giving the high rate and their DTI goes up, so they can qualify.
Right. And even some people are buying and their offer is accepted, and now they cannot find the insurance. So we have a lot of clients like that. So they already put in the offer, they pay the down payment, and the lender is there, almost loan is approved, but they cannot find the insurance. So if they find it is like way higher, and that messes up the whole loan process, their financial situation. So please do the homework, talk to your realtor or your insurance broker.
Awesome. So the next question I have is, what do you say in 2024 the housing inventory? Like 23 has been very difficult year because of the low inventory, price has gone, like it's still maintaining very high. Do you think because interest rate is high, a lot of people are not willing to sell their house, so that there will be more inventory, and the builders are not buying, like building enough, so there is more inventory in the market. So do you think inventory going to play the major role in 2024 in price goes up and down?
Yeah, right now I would say, if you look at analysis, real estate market is going through an expansion phase. Expansion means, lot of new housing is being built, and smaller homes, apartment buildings, the town homes, and even the single family homes are getting smaller, and even the big cities, they are bringing in new house building. So since they are in the building process, lot of housing is not available. So we have more buyers and less sellers. And the sellers are not selling, as you said, because of the interest rate situation. If they sell now where the interest rate is low, the new house they're going to buy, the payment is going to be way high, property tax is going to be way higher. So they are just in kind of a mode and wait and see. But I think we don't need to worry about it. Just like an economic cycle, as people age, right?
Right.
They're going to sell or they're going to downsize. As the new babies are born, people are getting married, they're going to buy the house anyway.
Right.
So it's just a cycle over here, and I think eventually the inventory is going to start showing up. Right now, this is February, and I'm seeing lot more houses in the market compared to November, December last year. So it's getting better. But as I said, if you like the location, you like the house, you're going to live there for 10 years, and your budget allows it, you have the down payment, go for it.
But like last time in my conversation, we said three Ds, like easily affects the inventory up and down. The first D was diamond, mean like people getting married. Second was divorce, and then the third was death. So because in that scenario, people buy or sell or things happens. So what do you think? Like, is it still 2024 will be that criteria will be there, or it is ongoing thing? In the,
If you look at right now the what do you call that Gen Zs or they are comfortable with renting places.
right.
Yeah, so if they are comfortable with renting, then it means there will be more houses available for millennials to buy at that time. Even the millennials, they are comfortable with renting right now. So it's not a big deal, if your mortgage is like two times the rent, like renting is not a bad idea. You could be living anywhere and be comfortable with renting. So, but the idea, as I said, the formula is 10 years. You can afford it. You have the down payment.
Right.
You are good.
Yeah, so like if you see the average age of these home buyers, first time home buyers, is slightly going up and up, because even as you said, Gen Zs, they are just like even have both dual income, they're not buying a house because of this house price or maybe their lifestyle change. It is a switch in America because before American dream was buy the house, have children, like take care of children, go to the higher education. Do you
Yeah,
think
it's the overall economy, man. It's the digital economy, the mobility. People are not stuck at one job. People keep changing jobs. People keep changing their careers. So they are not, and it's not like they don't live their whole life in one town like it used to be. So people like the mobility of it. Most of the time, it's a financial decision to buy a house, and people are not that attached to one house. So if they can make a profit,
right?
they'll sell the house and move on as long as the interest rates or their financial situation is better. So I mean, things are changing. Things are changing. Yeah.
Awesome. So the wealth creation side, I have another question. So for example, right now you see recently the stock market, especially Meta and Amazon, they had very good like a quarter. A lot of people are holding the money, so buy the house versus going in the stock market. You run the different kind of wealth management brokerage too. What's your suggestion for the people who are waiting? Where should they put their money?
So it really depends, what you are comfortable with. If you are not comfortable investing in the stock market and you don't know much about it or you don't have a professional who can guide you, sometimes it's hard for you, right? It's a waiting period. But real estate is such a thing that people can touch it, live in. They got the walls, they got the location, right? So if they are putting money into it, then it's a good thing. The other example could be, if so sometimes people say, should I pay the mortgage or should I invest that money in the stock market? So let's say if you have $1,000, you can pay the mortgage. That means whatever your interest rate is like 5 or 6%. You are saving on that $1,000. But if you put that money into the stock market, so you need to earn more than 6%, right? Over there to break even. So you got to be like really do your research on that one before investing or putting the money into the house. So a lot of other things comes in, the mobility, the flexibility, where you want to live. If you're not happy living in a bad location, but you own the house, might not be a good idea. Life's too short, right?
Right.
You'd be better off renting by the beach. That could be a good idea instead of go to a neighborhood and buy a house and you are always miserable over there, right? So I would say that, yeah.
The people are attracted with the like 2021 that pricing, like they bought the house, the price went up and now they become like they have really good equity. So do you think this is going to be onward trends on 2024, 25 and beyond? I'm like buying a house, it will go up and suddenly, or this is already reached the max and maybe go lower down. What is your prediction? I'm like, what is your suggestion?
No, on this one, I would say of course, all the markets, even the stock market, will go up. The price of milk and gas will keep on going up. This is called inflation. So things are going to go up. But at the end of the day, it's the quality of life that you have. Quality of life, right? So if your quality of life is not going to that good in the next 5 years because of your budget, and then you take on more payments and you are just spending money on things you may not even need it, then you're going to suffer with your quality of life. So you got to really analyze your own economy, your own financial situation, where you are and where you are comfortable at. But I think inflation is going to be always there. Real estate, like always, last 50 to 100 years, it earned close to 5%. A stock market earned close to 7 to 8%. So it really depends where you are, what your tax bracket is, what are your plans for the next 10 years, where your family situation is. So I would say talk to a professional, talk to Jay over here, your financial professional, your stock analyst. So make it, or get a financial coach who can guide you by holding your hand and help you make right decisions.
Awesome. The last question is, again, summarize this whole today's our talk show. Emphasize about like having a plan and action and getting things done by setting a goal. So financial fitness, as you said, in your conversation many times, people set the resolution but don't follow through and don't get success. For the financial fitness, at least for the like middle class, I'm talking about family, newlyweds, or maybe middle class people. Can you give any tips that the 2024 will be the awesome year for them as a financial fit?
Yeah. So number one thing would be, you need to learn, or you need to find out about yourself, what makes you happy. Right?
That's the number one.
That's the number one. What makes you happy, right? So to give you an example, a lot of things, people think, if I buy this house in this place, or if I have this big car and this fancy car, or if I have such a big diamond, or and then if I go to 3 vacations or different places, that's when I'm going to be happy. If that is the situation, then I think it's going to be tough, because these things are tied to the outside materialistic things, and it nothing wrong with that. But if you're going to be happy just because you went on vacation and you bought a house, you got a car, or you got a diamond, those are not that motivating factors, because once you get it, you guys buy a car, it goes down by 25% as soon as it leaves the showroom, right?
Right.
Right? You buy the house, if you're not that happy over there, you don't like the location, you don't like the weather, it's not comfortable, you are commuting 2 hours every day to your work. No matter what type of house you got, you're not going to be happy, right?
Right.
And at the same time, are you optimizing for money,
Right,
or optimizing for time? So if you're optimizing for money, you have no time to enjoy the money you made. You don't have time for your family, for your spouse, for your children, for your parents, or just to relax, or just go to a temple, right? You don't have no time.
Right.
So you may not be happy. So I would say, get a coach, talk to them, and see what makes you happy, and based on that, make your financial and life decisions.
So you are saying that focus should be also learn about the finance, learn how to manage the debt,
Yeah.
and then make decision by analyzing what is good for you.
Yeah, study it. Real estate is not, these days everything, all the knowledge is available on internet, right? You
Right.
can learn about loan, you can learn about real estate. There could be a lot of YouTube videos like this one, right? So, but talk to a professional that you click with. That's the way. And at the same time, talk to somebody face to face, and who can guide you, who can actually show you the mirror. And when you're talking to them, if you come to me, I can tell you if you're happy or not.
All right. Thank you, Mr. Gill.
All right.
Thank you for watching, and keep watching, and keep sharing, and keep sending me a question. This is the host JP Mandal from JP Mandal. So today we end our show here.